Okay, let's talk markets, and who better than Gautam Trivedi, managing partner at Nepean Capital, right here in the studios, to talk about exactly what he's making of not just India, but the world. Gautam, great to have you in the ETNA studios.
Happy to be here. Thank you.
And waiting to hear all about your US trip. First, let's talk about what the Americans are saying about America.
Yes, that's interesting. You're asking about what Americans are saying about America, and then we'll get to what Americans are saying about India. So I think the positivity that's there in the economy, it's still very robust. Things haven't significantly deteriorated as a lot of people were anticipating. Hotels, restaurants, flights are all packed. And the number that I have, which is even more interesting, is the fact that the S&P 500 companies this year in 2025 will be doing a cash spend of $4 trillion. And let me explain what that $4 trillion includes.
Sure.
Includes CapEx, includes R&D, includes share buyback and dividends, and some amount of M&A. So given that figure, $4 trillion, that's more than our current India's GDP. That's one. The second element is that next year, the consensus estimate is it's going to go up by about 11%. So the earnings growth that we've seen all of this year within the U.S. economy, we've seen now a figure of $4 trillion, which I wasn't privy to before. And let me just add another element to this. The dividend and the share buybacks will be approximately $1.7 trillion. So that's money going straight into the bank accounts of shareholders / consumers in the U.S. So yes, the U.S. economy is clearly not in a slowdown mode right now.
And interesting that you made that point about S&P, because the perception outside in the world is that it's just about the MAG or the Fab 7, and they're the ones which are holding the U.S. equity markets up. Clearly, that's not the case.
That's not the case, and I'm only referring to the top 500 listed companies.
Sure.
There are another about 4,000 or so listed companies which are not captured in this 4 trillion number. The private companies are not captured in this 4 trillion number. So, for example, OpenAI's CapEx is not part of this 4 trillion. So, the number clearly is a lot bigger, and I'm not sure what it is, but could be potentially another $1 trillion.
So what's Americans saying about India then?
Yeah. So a few things. First and foremost, I think 8 out of 10 people that I met, or maybe 9 out of 10 investors that I met, are clearly underweight India. Underweight by as much as 200 to 250 basis points vis-a-vis the MSCI Emerging Market Index. India's weightage has fallen from a high of 21% last September, to now 15.7%. So clearly there's been a whole bunch of selling. We've seen year to date about almost 17 billion of FII selling. So that proves the point. The other element that's interesting is that people asked about the future of Indian IT, given H-1B restrictions for fresh job opportunities, and the onslaught of AI that's coming. So I think a lot of investors were concerned about that. And again, you've seen in the last 5 years, these Indian IT stocks have done nothing. I don't see necessarily any light at the end of the tunnel as yet, unless they reinvent themselves. TCS, I think, frankly, going and announcing an investment in the data center business is a great positive to pivot into an emerging business. But the other question, of course, was with respect to AI in India. And are there any listed AI companies? How do we play AI in India? There have to be AI opportunities, and there was a lot of expectation on that. So I think these are some of the themes that were coming out. And again, the need for power that in turn fuels AI, and how are we doing with respect to power generation, transmission? So a lot of questions around that.
So before we delve deeper into India and the opportunities here, why is it that FPIs and FIIs have stayed away from India? Is it more a relativity game, other markets looking more attractive? Or is it a pure India call that because of earnings, I guess, tipping off?
So, here's the thing. The interesting part is the valuation aspect was really not that big a deal. Surprise, surprise, right? Because India has historically been expensive. But you marry high valuation with an earnings slowdown, which has been around for about 18 months or so, then we have a real problem. So that's actually what's happened. So people said, okay, valuations are still at about 22, 23 times 1 year forward, which is the same, by the way, of the S&P 500. And what's the funny part is that in the U.S. investors find S&P 500 at 22 times expensive, whereas here in India, we are like, it's only 22 times. It's not a big deal, right? But the point I'm trying to make is that if earnings don't improve, then FIs will continue staying away / selling. But if earnings do improve, which is the hope trade that we have here with the GST cuts, and we've seen the last 5 weeks of explosive sales, at least in urban India, and if that sustains, I believe foreign investors will come back to India.
Do you think the Nifty earnings are going to be good in FY26 because many of them have already, start penciling in 27 growth for any forward investments?
See, here's the thing. It's a valid question, but the second half, if you get onto any of the earnings calls that started this season, everybody's talking about a better second half. And that's, again, a big hope trade. Backed, of course, by cut in interest rates, the cut for the GST cuts, of course, and on top of that, the PSU element where public sector employees are obviously going to get a pay hike very soon. Yeah. So you add all that together, there's a big hope trade in effect that earnings will improve from the second half of this year and flow into FY27. So if that were to happen, I think we're back to the races.
So financials are something to play out in this scenario?
Definitely, yes. We're quite bullish on financials, not just because of the fact that the economy is, going to start to get better, but the other element is that there's a host of event-driven stuff happening in the financials. But I don't mean just commercial banks, also NBFCs, gold loan companies, where you're seeing increasingly foreign participation from the Middle East, from private equity funds. So restructurings, change in CEOs, new cash infusion. So I think that is a very exciting space to be in at this point.
The other exciting space has also been what's happening in the primary market, right? I mean, to think of India as now the 4th largest IPO market in the world. Yeah. What is the investor chatter around that? And especially the sort of emergence of the consumer tech companies now within the listed pool.
So, what's ironic or interesting, rather, is that FIs have been selling in the secondary markets, but they've been very active in the primary markets. Yeah. So the one question that was asked to me recently was, where would you put your money incrementally? And I said, yes, there are event-driven situations like I explained for banks as an example, but I think there are enough opportunities in the primary space right now. So I think the pipeline is still massive into this current quarter and ongoing into the next few quarters. And I think foreigners are taking a bet that we'd rather put money and take our chances with new listings versus existing companies that are seemingly overpriced.
Are you seeing good interest coming into mid-cap companies? Because even if you look at the MSCI, the pool of companies which was around 80-85 has now doubled to almost 180-190 in terms of additions which have come in. So the interest is much on the mid-cap side where their returns could be much better and the growth is much more visible?
So it's not so much mid-caps or small caps, it's very sector-specific. So power, for example, in our case, at Nepean Capital, the second largest sector allocation is to the power sector. Who would have thought, didn't expect when we launched our second fund that we would be this heavy in power, but it's been a good call so far. So
it's NBFCs or rather BFSI, it's power and what else?
And I think new age tech. New age tech companies still look interesting. They got a long way to go. So we like that. And then, of course, there are special situations when there is a specific turnaround, change in CEO. So you have to keep your eyes and ears to the ground to see those and find those opportunities.
And you see platform companies doing better now in the sense the valuations which are coming in, the controversies which are there for with respect to one of the IPOs which is there and the one which is going to be launched today.
Yeah. Yes and no. It's very, very specific. I don't want to comment on a specific one being launched today or one that's closing today. So I don't want to talk about that specifically, but I guess every investor has his or her view on how to approach this.
But eventually, do you think it will boil down to profitability? I mean, besides that opening pop and the frenzy, once that settles down, do you think eventually it will have to be about profitability, showing the numbers, and then, of course, the market will find its sanity? Pretty much like what happened in 2021, right? Most of the entire class of 21 listed with a lot of hype and, hoopla, and then finally realization about profitability set in.
I think it will. It's a matter of time before that happens. Maybe, I guess investors will give it 1 or 2 quarters to figure out which way the earnings are headed. I think the other concern is that, and I don't want to, I'm just generalizing this, I'm not talking about any specific companies, but the numbers look very good pre-IPO, i.e. the last couple of quarters, and then, is there other, you have to understand the quality of those earnings. Is there other income involved? Is there a sale of a major asset that caused the net profit to suddenly spike up? So those are things that investors have to watch out for.
The belt tightening before the IPO, and then suddenly the belt is off.
Exactly.
Tell us something about the flows there.
Yeah.
We've seen in the last couple of quarters flows going into China, Korea, Taiwan.
Yeah.
We've seen China's weightage within the MSCI also, going up from 22% to 30%.
Correct.
So there's now a huge gap of nearly 15% between India and China.
Yeah.
Do you think the flows will reverse at some point in time?
So, here's the thing. If you look at year-to-date dollar returns for these markets, Korea is up a whopping 93%. Did you know that? I mean, it's massive, right? Taiwan, China, and the Hang Seng anywhere between 30 to 35%. So we are at 4% dollar return as in the Nifty 50. And I'm talking of only the benchmark indices in each of these markets. So clearly, that I look at that as a bit of a positive versus saying that, oh, gee, we were up 80% and looks tough to where do we go from here? But we're only up 4% this year. So the good news is that hopefully with the earnings returning, with all of the things that we discussed with respect to GST cuts and all of that, if the earnings do sustain, I think the FI interest will certainly come back. The one feedback that I got throughout this visit was a lot of interest in India. Doesn't mean they want to invest next week, but everybody wanted to know that we think China, the interest in China and Japan is, it's been there, done that. What's the next big opportunity within the EM space? Is it India? And why? So the good news is there's people asking questions about when to put money in India.
So what was your pitch?
My pitch was yes and yes and yes. We all are brand ambassadors of India, right? Don't forget.
Of course.
Yeah.
Absolutely. So, but I'm quite surprised about the view in China because there was that whole deep tech moment and we've seen the outperformance of China, I guess, relatively, which is why India has also seen the FIIs and FIIs wean off.
Yeah.
I mean, is that really short-lived? And was that all now in retrospect only a tactical play? So
I think the China sentiment is a lot to do with the U.S., the relationship with the United States, right? Now, I'm not sure if you've seen the 60-minute interview of Donald Trump, which I watched last night. Clearly, he's softened his stance on China. He's brought down duties. Chinese ships will be paying lower fees when they enter U.S. ports. So if that is indeed the case, that has a more positive impact on foreign sentiment on China than it does for India. Because our trade with the United States isn't really that big. It's $80 billion. It's really nothing compared to half a $1 trillion for China. We're even actually less than half of that of Vietnam, which is a much smaller country. Yeah. So I think the sentiment with respect to China has more to do with the relationship with the United States. For us, it's less so of an issue.
That reminds me, what are people saying about the entire, tariff tirade and then, of course, the tax also which follows?
What I do every time I go to the States is I go visit Costco. I'm a member of Costco. It costs all of $65. But what it does is, of course, you recover that money within the first few purchases. So that's fine. But the fact is, I always go to the clothing section to see how much how many of the clothes are made in India versus other countries. So I was there in May this year. I found a good, I'd say about 30% of the clothes actually made in India, which was great. But on this visit in October, I found very, very few items made in India. I found Vietnam, China, of course, completely dominates.
Bangladesh.
Yeah, Bangladesh. As I said, China dominates. Peru, Kenya, some from Pakistan. But India wasn't really that much on the shelves. And that is not just Costco, but even other clothing stores.
So that's a concern for some of the domestic companies looking at export markets, right? Means it's a clear say of how tariff is impacting many of the exports.
Specific to the United States, though. Not other countries.
Especially textiles and others.
That's right, yeah. It's a real issue, and I think we need to, I'm sure the government's trying their best to solve for this.
But, you know, the fallout of the entire tariff tirade on the US economy per se, you think that's just sort of a hogwash or a fallacy and there wouldn't be any material impact?
It doesn't seem to be the case because at this point, even my visit to Costco in October last month was packed. So, you know, it's not like consumers are slowing down. All of the numbers that come out, the figures that come out from the States, of course, there's a government shutdown, so we haven't seen numbers in the last few weeks, but there didn't seem to be any signs of any cutback on consumption.
Gautam, you know, you are overweight on power. It's one of the key sectors for you. How do you look at the entire renewable space in that sense, with respect to the kind of, you know, energy capacity that we will need as we move towards a 10 gigawatt data center capacity within the country?
Yeah. So I think that's a good question because it brings up a lot of interesting points. If you look at India now from an AI perspective, okay, we've got 750 to 800 million smartphones riding on 4G and increasingly 5G networks. So you basically armed your people with a device and with a network that gives you direct access to AI. Secondly, every mobile operator is offering AI free for the first 12 months. Jio tied up with Gemini, Bharti Airtel tied up with Perplexity Pro, etc. So as a result, what you're seeing is that the average search on AI, or a chat GPT as an example, consumes 10x the power of a Google search. Where is that power going to come from? So currently, all of the data is housed in Palo Alto or somewhere in Arizona or, you know, some other state in the United States. But the government of India has basically told all of the social media companies that in a certain time frame, we want that housed in our country. Can't be sitting in, you know, in some other country. But we don't have the data center capacity. In fact, over the weekend, I was in Delhi and I went to a data center, and, you know, those guys have mega plans because the demand that's coming in from AWS, from Azure is just staggering. So they all are running, you know, on a treadmill to try and get more of their data localized of Indian citizens. And that capacity, I think, is just going to exponentially keep going up in India. So it's a phenomenal opportunity for the data center business and the adjacencies around the data center business.
And so right now, the AI plays are deduced to only power as well as data centers. So now,
in a sense,
India.
In a sense, we're playing the AI opportunity through power because there aren't really any materially listed companies. Not yet.
No, when we talk about TCS, you know, pivoting towards data centers, do you see more IT companies looking at the similar model going forward?
Haven't heard that yet. They should, because I think their core business is under threat from AI itself. So if they don't pivot fast enough, you know, and I think
they don't have a role in the infra part of it or compute part of it. It's only the processing and the software stack that we can make, right?
Well, they can get into the cloud business. So you don't have to be, see, the pure data center business is like a mall business. You're a mall operator, right? You make a building with 10 floors and you're leasing out each floor to whoever wants to, you know. So that's one element. But that's a very basic element of the data center business. You're literally a landlord and you're charging rent. But if you can add more layers, including cloud computing, then you're getting into more value-added businesses, and then the market's going to, you know, give you a valuation for that.
So otherwise, can it really turn around the prospects for, say, a TCS, which has been the first mover, so to speak, into the data center arm?
The answer is yes. I'm not sure what the board is thinking with respect to more investments. Where do they go from here? How big?
Okay, let's refocus and talk about an earnings candidate and tighten the